Let's get you updated on our grain trade. I'm Marlon Bowling, your tour guide to the ag commodities. I am joined by Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. Quick question for you, Brian. The mercury was dipping pretty low in the plains. There has been a lot of talk about that here this week and its possible impact on the wheat. How did you fare where you are, and from there points westward?
Yeah, I've heard from some clients that maybe they're starting to see a little bit of damage show up already. I've seen some pictures on Twitter as well, same thing. But, you know, there's some dry parts of Oklahoma that some of that dryness is starting to show up in the wheat, and then you throw some very cold temperatures on top of it in parts of Kansas. There's a little bit of concern about this winter wheat crop. We're not seeing it in the price action today, but in the last couple of days, we've put in a little bit of a premium because of that very cold temperatures.
Yeah, we had to wonder if, of course, being the futures market, they tend to look ahead and try and build in the pricing ahead of time. And so they were talking about the approaching cold snap last week, and that is when the wheat futures rally. They are selling off today. In fact, let's run through the current commodity boards, and then we'll talk more about that. Let's start here with the corn market. We're down 4 at 327.5, and we have December down 2.5 at 347.25. I did not see any overnight export sales reported this morning. Everything quiet on that front. Interesting where the nearby May is leading the charge to the downside today. On the soybean trade, soybeans have been weak in the knees. We have the May contract down 7.5 at 846.75, and November new crop beans down 7 now at 863.5. And then we get to that wheat that Brian was just talking about, and we have Chicago May wheat down 7.5 at 547.5. The July new crop is down 8, so lots of pressure in the wheat complex today. Kansas City wheat at times has been showing double-digit losses, and right now it is definitely there. May down 12 3/4 at 481.25. July also down 12 3/4. The Minneapolis wheat today, it's down, but not as much. July down 7.5 at 531 3/4. Brian, I see off of the newswire, just as I was coming down to the studio here for this broadcast, it says where Egypt has bought 120,000 tons of wheat. This would be from Russia this time around, so we actually lost out on another one. I guess not a big surprise there. That tends to be their biggest supplier lately, right?
Yeah, Russia's the number one supplier of world wheat, particularly to Egypt. They're a pretty aggressive buyer from Russia. The U.S. actually had some hard red wheat priced in that tender offer, and we were not the most expensive commodity or most expensive country of origin. But when you factor in the freight cost, we ended up being about $20 a metric ton higher than any other country. So we were the most expensive when you factor in that freight cost. And I think that's why some of this wheat market is pulling back a little bit. We are just a little too rich and too expensive here, factoring in freight costs to be competitive on a world market.
When it comes to South American harvest weather, it sounds like everything is pretty benign, I guess, in that regard. So maybe they're coming down the home stretch without too much of an obstacle.
Yeah, they really are. You know, Brazil's going to wrap up here probably this week or next. They're nearing their completion, slightly ahead of average. The corn harvest in Brazil, the first harvest, is in line with average pace as well. So in country or in places like Safrina, it's essentially complete, and they're not having much in the way of any type of disruptions.
Okay, so not too much to move the market in that direction. We'll come back here in a moment, and Brian will discuss the wild gyrations in our livestock trade today is no different than the last couple of weeks, and we'll talk about them on the other side. We're talking with Brian Hoops. Let's dive into our livestock trade for you. We start with live cattle. Live cattle opened up higher this morning and looked like a bit of a bounce, even though they had been called lower, and then the rally failed. It fizzled out quickly. We have the June live cattle currently trading at 80.70, and that is down 67 again. So that means we're almost $3 off of our earlier high this morning. We have August down 80 cents. On the feeder cattle market so far today, we have the May contract down 323 now at 111.22. So here we go again with these big wide swings. At a high of 114.45 on the open. The August down $1.97 right now. And now let's look at our lean hog trade. Currently on the lean hogs, you have your May contract Now it's down 4.15 at 35.52 after a high this morning of 41.38. What a dramatic swing there. Nearly a $6 turnaround already. June down 2.90. And remember, all these are trading in expanded limits here today. So, Brian, the packing plant issue looks like that could be with us for quite a while. What's that doing to the feeder cattle market out there? I had heard where the placements are really low, but where are these young calves going?
Yeah, they're going to have to stay out on some grass pastures, probably graze on some wheat as well. So it's really, backing up the cattle. A lot of the clients telling us if they have feedlots, cattle that are ready, their orders are being canceled, told to keep these cattle on feed until they have a home for them. And that just means you can't place any cattle into the feedlots. Those are already full, and they need to make some room, but there's just nowhere to go with them. So we have a real bad situation as far as our news goes. We can't kill the cattle. We have to keep putting extra weight on, and that's going to keep increasing year over year. We should be using more corn and maybe wheat as feed, so that would be a positive from that standpoint. But the other part of the news equation is all pretty negative. The cash market's likely to fall, even though the future is already anticipating this market to come down into the summer months. The traders are really fearful that the futures market will continue to work lower until we get some positive news.
And on the other hand, it's not like you look at it from the hog producer perspective, and it's not like you can take the hogs and turn them out to pasture. It doesn't work quite that way. So, yeah, they're totally reliant on increasing the feed costs as well. Brian, thanks for the information. I appreciate it, sir. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And the beat goes on. Christina.